All right, good morning and welcome back to this channel. This channel is a new channel, as you can see. Before we start, I would like you to do one or two things. It's just easy. Just subscribe, like, and comment. So let's start. First is I always come here every weekend. This is where I come to analyze one, two, or three pairs that I'm trading for the moment or that I wish to trade. Like last week, previous weeks, I've been analyzing gold, I've been analyzing USDJPY, I've been analyzing Euro USD, I've been analyzing most USD based pairs and JPP based pairs and JPYs. And my pattern of trading is a very simple strategy. It's called the top down analysis, or you can call it the multiple time frame analysis. It is very much the ability to go to higher time frames like the monthly time frame or the 3 month and pretty much know where the trend is at the moment, whether the market is going up, down, sideways, or is it ranging, or is it choppy. This will give you the ability to know if this trade is worth your time trading, whether you should be trading it or you should wait or you should just look for another pair. It's very much easy. Understand the overall flow of the market, scale down to the 4 hour, to the weekly time frame, where you're going to be plotting your key support and resistance, your key resistance and support. Once you plot these levels on the weekly time frame, and on this weekly time frame, it takes 1 week to get a complete candle close on that time frame. So each candle close you see on a weekly time frame represents a whole week of market trends and sessions. A whole week takes 1 week candle. Likewise on a daily time frame. On the daily time frame is where you want to come and see what the chart pattern looks like. You are not trading candlestick patterns, you are trading chart patterns. You want to see if there's a possible head and shoulder pattern in the daily time frame, or inverse head and shoulder, double top, double bottom, bearish engulfing, bullish engulfing. This is what you want to be seeing on the daily time frame. Once you do that, you scale down to the 4 hour time frame. This is how I trade. I scale down to the 4 hour time frame and very much look for entry positions. If I'm buying, let's say like gold last week, my previous analysis has been gold has been on a range throughout last week, and I was anticipating a buy opportunity. I was waiting for a breakout of that weekly range. So once I scaled down to the 4 hour time frame, I discovered that it was very much on a range, and I said, okay, I'll be waiting for a breakout and a retest. However, when that happened, I saw a breakout and I saw a retest. Although I wasn't on that trend yet, it just broke out and made a massive bullish move to the upside, getting to the 3,000 per ounce price, which I've been analyzing, I've been calling for weeks. And last month that gold is coming there eventually. And now this week I've seen that gold has already gotten there. However, it is about to make some pullbacks. These pullbacks is where I want to be entering another buy opportunity. So if you stick down and watch this analysis to the end, you're going to very much see how I go about analyzing the chart from the higher time frames to the lower time frames, and how I'm going to plot out my key levels, although they're already plotted. But it's very much give you a guide on how to trend and how to trade the markets using the multiple time frame analysis. It's very easy, it's very simple to understand, and it's very profitable. You don't have to be a day trader or a scalper always clicking buttons. No, it's the ability to trade in a calm mood, understand where the market is at the moment, place your trades, identify your risk, and close your PC and do some other thing else. So do well, and I want to see you in my screen. So stick to it and let's go. Alright, so welcome back inside my screen. This is very much a quick, short, and careful analysis. I've already mapped out my key levels. If you've been watching me from previous videos where I said gold is very much bullish from the higher time frame, and since then I've been calling it bullish since I saw it break out of this level and from the higher time frame. So now you know what I'm waiting for. I'm waiting for pullback. But then, for the sake of those joining us, I will very much go back to the monthly time frame where I started calling gold bullish, when I started saying gold is going to come to this 3,000 per ounce price. I started calling it bullish when I saw it break above this. This was a massive resistance and this was a support. I made it, as you can see from this support, when it broke out of this was a resistance, it broke out of it, it became a support. This is just when you break your ceiling, it becomes where you step. So its resistance is up, support is down. So when you break the resistance, you start trampling on it and it becomes a support. Likewise, so it broke out of this resistance, it became a support, and it made a very strong, massive bullish move to the upside. It got here, it rallied back, picked some buy orders, and broke out again. And now, since it broke, when I saw this, I started calling it bullish. I said gold is very much bullish. Selling gold at this moment is just you wasting time and making yourself a bait in the market and being at the mercy of brokers, being at the mercy of institutional banks that are already following the trend, because the trend is the bigger picture. This is the bigger picture. This is the monthly time frame, and you can't go against the monthly time frame. That's why you get stopped out. The moment you start to trade against the overall, this is the overall boss of the time frames. This candles represents a month. This is January, this is February, and this is March. So all these candles represent a full month of trading session and trading hours and everything. This is a full monthly candle close. So when I saw this, I was like, okay, it got here. I started buying from here. I took some partials along the way. Then it got here. I will show you when it got here. It started ranging. I said, okay, let me look for what price does from there. And whenever it gets to this point, it's going to pick some buy orders and look at the next point. It's coming 3,500 until it gets to 4,000, just like that. And this is how gold has been going. Gold barely go down. It's always pointing up. Now, if I should go to the weekly time frame, the weekly time frame is very much where I come to map out my key support and resistance. Like I've always said, this is a resistance level, and this is now serving as a support, because this was a resistance and is now a support. So this is going to be a resistance. However, on the 4-hour chart last week, if you watch my previous analysis when I said gold is very much ranging and I don't have an open position, I want to see what price does from there. If I should go to my daily time frame, as you can see, I'm scaling down from the overall time frame. Gold is very much bullish. When it got here, I started buying from here. Got here, I took partials, rallied here. This was when I started buying gold. I stopped buying from here because this candle took my partials out. However, I got something from here to here, and I wanted to see what gold did, and it came down here. It didn't come close, almost closer to this support, this resistance that is now a support, and it picked some buy orders to the upside. And since then it was ranging, it has been ranging right inside. This was a range on the 4-hour chart. I'm going to show you when it's scaled down to that time frame. And I said I won't be touching gold until I see it break out of that time frame, until I see it break out of it. Was on a massive range here. This was the range it was on the 4-hour chart, and I said I won't be interested in buying it until I see a break above it. And as you can see, this is a daily time frame, and all these are daily candles. It very much tells you this is the whole trading day on Thursday, this is Wednesday, this is Tuesday. As you can see, this is a daily time frame. It takes one full day of market movements and trading session to complete a daily candle. This was Friday. There were just a little trading movements and liquidity on the market. So normally Fridays you get to experience low liquidity in the market. That's why I don't even trade on Friday. Besides, I'm a swing trader, and this is where I very much want to start buying gold again on the 4-hour chart. As you can see, like I said, this pair was on a range throughout. It got here, and I said stopped. This was where I said I won't be interested in it until I see a breakout. It got here. That was last week Monday, on the 3rd of March. It got here and it started trading very much inside this range, and it became like a choppy market for me. As you can see, it was trading just buying up down up down up down. It wasn't actually getting closer to this this minor resistance, and I said, okay, since I've seen this, and you can remember from the higher time frame, my overall bias has been bullish, just to buy. I'm not looking for sell opportunities. I said, okay, I want to see a breakout. Once I see a breakout and a retest, I will start buying from here to this overall target. However, on Thursday and Friday, I saw it make a very strong, massive bullish movement. But however, I'm not a trend, I don't chase trends. I said, okay, since I missed it, let me wait for pullbacks. This is how I trade. Once I miss a particular market movement or setup, I always wait for pullbacks, market to come back. Whenever it goes up, it always comes back to pick some orders to continue its upward or downward trajectory. And I said, since it has made a massive bullish movement, I want to see it come down again, like something like this. I wanted to see something like this, move here, come down here, then up. This is very much what I want. I want to see it retrace back to this level or very much closer to this level. It could be here. Yeah, once I see if this is a 4-hour time frame, remember all these are full 4-hour candle closes, and you can see this is a very wrong place to buy. Imagine you buying from here and it rallies back down and stops you out. So I want to see it break down, make a pullback to this level here or here. Then once it touches it, I want to see a bounce and a retest. I want to see a 4-hour candle close above here, and I want to see a retracement, pullback here, and also a 4-hour candle close above. This is where I want to start buying, something like this. I want to start buying from here. My stop loss will very much be below this trend line support. Then my overall target is up here. As you can see, I'm not going to be buying up here. I want to see it come down. I want to see it come down here or here. I want to see what price does, like a pullback. When I see the pullback complete, I want to see lower high, lower low, lower high, lower low. Then I see a lower high, a lower low, a lower high, and a lower low. Then I'll start entering. I want to see after that pullback, I want to see a bounce. That bounce is where I want to start buying to the upside. It's as very much simple and easy to understand. And this, as you can see, price is very much here, and I don't trade against the trend. So though some people might actually want to start selling off from here to this pullback, maybe from here to here or here, however, I'm waiting patiently to see it make its pullback. It's going to make pullbacks, and I'm going to enter. I want to start buying again to the upside, or I want to see it break above this price level, test it, and then I start buying, or something like this. Our second scenario, I want to see it make a breakout, retest, and this is where I want to start buying. As simple as that. But remember, this is a 4-hour time frame. Once I enter this trend, I want to very much leave it, or I could hold it for 5 days, a month, 2 weeks. It depends on how long I perceive the trade is going to last. So this is very much easy to understand on gold. Like if I should go to I want to make this video a very sharp and quick one. Let me go to BTC. Been calling BTC. BTC is making some bullish move, as you can see. Let me go to the weekly time frame. It's very easy to understand. These things are easy when you understand price action and how to analyze the market from the higher time frame to the upper time frame. So I want to see, like what I'm seeing is the market has made a move from here, got to this resistance. This is a very strong resistance. It broke it, tested again, it couldn't break above it, and it pushed this price down to this level, almost getting closer to this support. However, we have a trend line support, and it's very much tested this trend line. And again, I always have what I call the major support, the minor support, the major resistance, and the minor resistance. This is my minor support. However, price broke below it, get closer to this stronger support, and it's bounced again above. I want to start buying once I see if a full daily candle close above this support level here. From the daily time frame, as you can see, the market is making lower high, lower low, lower high, lower low, lower high, lower low. However, it has made a lower high. So if it fails to make another new low, and this new low is supposed to break below this trend line. Remember, this trend line is from the weekly time frame. So once I see this, or I want to see 2 daily candle close above here. Once I see 2 daily candle close above this level, this is where I want to start buying. I want to start buying from here. It's as easy as that. I want to see 2 daily candle close. I want to start buying here. My stop loss here, and my overall target will be here. This is, remember, this is a daily time frame. This is 48 to 1. So I'm risking 1 to make 48. It's as simple as that. I'll risk, once I see a daily candle close above here, thereby taking out this bearish movement, and I will start entering. I will start buying from here, my overall target. However, once market gets here, I will still add on that position to target this whole price, this level. So this is my bigger picture. The bigger picture I have on BTC is still very much on that resistance. However, I will first test the waters with this, then once price gets here, I will add another position to the upside. So it's very much simple, and this is how I go about trading the higher time frame. As you can see, is very much knowing where the market is at the moment, knowing the bias. You don't need to trade out of context. You understand from the higher time frame what is price saying at the moment. Is price ranging? Is it choppy? Is it up? Is it down? Once you understand this, then you scale down to lower time frames and pick your entry positions, like the 4-hour time frame. Like if I should go to my 4-hour time frame now, it's easy. It's easy. As you can see, it's making high, 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 low, high, 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 low, high, high, high. I want to see it take out. I want to see it. I want to see market trading above this trend line. This trend line will take out this bearish movement. Once I see market trading above this trend line, I will start buying this. I will start buying BTC so it gets to where I want it to get to. And you remember, I don't just start buying. I buy and hold to get to where I want it to go to. So it's as very much simple as that. Let me look again into another pair that I also trade, just simple pairs. Yeah, USDJPY. USDJPY is still very much bearish. It's very much bearish from the monthly time frame. As you can see, it's very much bearish. Yeah, it's simple. Like, where is price coming? Once it starts trading below this minor support, the overall picture is this: price is coming here. This is where this pair is coming to test again. This is a very strong resistance, a very strong support. So this pair is very much coming down to this level. It could take weeks, but I don't care. Once I enter, I allow it to roll to the downside, and I'm okay. So on the weekly, this is it. I'm waiting for this retest to get completed. As you can see, this is lower high, lower low, lower high, lower low, lower high, lower low. I want to see another retest. I want to see break below with a daily candle. I want to start selling from here to here. It's as simple as that. On a daily time frame, this is where I want to be entering. I've seen markets come closer to this trend line, because if I should bring my Fibonacci, I also use Fibonacci as well. As you can see, this is it. This is what's called confluence. According to my mentor, he said this is confluence, where you have most of your charting tools coming together to give you a confluence on how to enter the market. So this is Fibonacci 0.50 level, and it's a very strong level. It's respected. This is trend line on the daily time frame. Remember, this is trend line and this is support level, all coming together. Once I want to see on Monday, I want to see a 4-hour candle close below this line. There's a 4-hour candle. There is a line I have there. I've been monitoring this since last week. I want to see, yes, this is it. This is what I want to see. I want to see a 4-hour candle close below here. Once I see a 4-hour candle close, this is where I want to be selling this pair. I'm going bearish, going short on this pair. From there, and this is how I'm going to enter. It's as simple as that. I want to enter here, my stop loss here, and the overall target is very much is a very long one. My overall target is very much closer to this level. So this trend is very much going to run for weeks or even a month. I don't care, but whichever day it gets there, I'm very much okay. However, look at what I'm risking. I'm risking a little of this to make a big of this. It's as simple as that. Is you being able to understand where the market is at the moment. Once you do that, you scale down to the lower time frame and you're very much good to go. So this is it, this analysis. Let's see next week. Let's get back to the screen. Yeah. All right. I want to thank each and every one of you for sticking through the end of this analysis, and you all know what to do. It's as simple as that. Just click subscribe, hit the bell icon, like, comment if you want, then share to others, because this is a growing channel and I want it to be in such a way where it's going to help other struggling traders to have a directional bias first, know where you're going to get out before getting in on the trend. It's as simple as that. It's you not trading out of context. The channel is here to make sure traders don't trade out of context. It makes sure it gives you a directional bias for you to enter the market. You don't just wake up in the morning and start trading. No, you have to first analyze the market from the higher time frames. Then you can do that before trading, let's say a day before. Then you understand, okay, if I'm seeing this, I want to be buying this pair, I want to be selling this pair. Once you've already identified that, then you scale down to the 4-hour time frame and wait for your opportunity to either buy or sell. So this channel will always, I'll make sure I'll always update it, always make new videos on weekends, and make sure to like, comment and subscribe and help us grow. Want to grow larger, want to make an impact in this industry, and very much save people's time and money. Make sure because there are a lot of people that are always blowing up their accounts, always getting margin calls, always getting stopped out, and they wonder what is their problem. Most times your problem is, it could be from the time frame you're trading, from your stop loss levels, from your psychology. Different things that leads to unprofitability. So if you stick to it and share this message to others, and very much tell others to watch and subscribe, we're very much going to grow and create an impact in the world and in the industry at large. So I want to thank you once more for staying to the end, and see you next weekend. Cheers.